good afternoon. Pleasure to have you part of the podcast. In ways of introduction, I know there's many people who know who you are and know what you do, but could you give us a bit of a background on yourself, your journey, and essentially how you've ended up here with us today?
Hi, George. Thanks very much for having me. So my name is Amir Sharifi. I am the Chief Investment Officer and co-founder of Hy24. Hy24 is a dedicated hydrogen fund manager, which has started 2 years ago to raise and deploy funds in the hydrogen space in both infrastructures and equipments. And I initiated this project together with some people who come from Air Liquide as a joint venture initiative that was combining on one side the asset management strength from Ardian, and I'm coming from Ardian myself. I spent 17 years there, and the industrial capabilities that were brought by Hy24 and the other folks from FiveT Hydrogen, with whom we have joined forces.
Yeah, fantastic. And in terms of climate change in general, sort of taking you back maybe throughout the career, is there any significant moments where you think this is what drove me to be part of the climate energy sector?
Well, it was a kind of succession of different events and over time that led there. So after I graduated from business school, I started my career in the consulting, strategy consulting with a European firm called Roland Berger, and there I was focusing mostly on utilities, and I did many assignments for utility companies and helping them to think about strategy and also operations. That was the first insight into the energy world, a very formative one. But then from there, I knew I wanted to switch from being just on the advisory side to being more into the decision side of things.
Yeah.
In order to have more impact. And I remember when I decided to do this move 5 years after having joined the strategy consultant, for me, the key word in my mind was impact.
Yeah.
But I didn't think of it the way that the word is connoted today, which is about environmental impact. It was more about how to impact organizations, how to impact your overall system and environment, but not necessarily with this ecological mindset in mind, which was back in the early 2000s was not top of the agenda. The climate change was not top of the agenda as it is today. But still, I wanted to be in the investment world for that reason, and I was very lucky to join. At that time, Ardian was called AXA Private Equity, so I joined Ardian then. That was in 2007, and my first years were with the co-investment fund, which actually was a fund dedicated to co-investing alongside the very large, like the top tier GPs like KKR and Blackstone and all of these and Carlyle and all of these players on like super big LBOs. At that time, there was a spree of very large gigascale LBOs in billions, and I was involved in many of them because we had a huge deal flow. But it all stalled in 2008 after the financial crisis, the subprime crisis started to accelerate. There was a kind of a ban on investment, and in any case, there was not so much investments available at that scale, at least. And that's the moment when I was asked by the CEO, so Dominique Sénéquier, CEO and founder, to work on a strategy paper on what was this crisis.
Yeah.
And that was a kind of moment of truth to do this work, because it was a way to understand all the ramifications of the financial industry and all the issues that were linked to that syndication of risk that were just not adapted. But the merit for me was that it got me to become very close to the CEO, and also to present that work to our investors. And one thing leading to another, I became the head of corporate development of Ardian at that time. And then communication was also attached to this role. So it was taking the whole overall role of around corporate developments and communications for Ardian. We at that time was still I would say, a mid-sized private equity fund manager with, I think we had 20 billion on the management. We were only 100 people back then. So just to give I mean, order of magnitude, today it's 160 billion under management, and we're 1,000. So
Oh, wow,
it's been a massive growth, like almost tenfold in that 15-year period. And that I was like, one of my roles was to think about what's going to be the strategy for Ardian going forward, to become to set the scene and the foundations of becoming a prominent fund manager that would keep its rank in the world overall worldwide space of private equity investments, which was dominated by US players. So that was a fascinating piece of work. It was one of probably the most challenging periods of my life, because I was working in direct connection with the CEO and the executive committee of the group, and strategy and corporate work were super important at that point in time. So I didn't answer your question. When did climate come into play? There, I'm going to answer now, because one of the things I did in that role was to structure the pillars of Ardian, and around key strategies, because before we were just thinking about products but not about strategies. And so we said, let's think about private equity as being one key pillar, but let's also think of real assets to be another pillar, and credit to be another pillar. And so by structuring key pillars, we realized that we were clearly underexposed on the infrastructure side. And also on the credit side. So we decided to give a lot of strength and focus on delivering alternative growth engines to the company by growing that infrastructure business that was at its infancy at that time. And then that's why a couple of years later, I decided to join the infrastructure team of Ardian, because I knew that it was a massive opportunity, but back in 2010, it was still something that was a bit under the radar. And the first transaction I did was in energy transition, was in renewables, actually, investing into a wind developer in France. And it was, I would say, more of an opportunistic move, but also because I think many people in the space were not really ready to invest into renewables at that time. And on my side, I had the full conviction that it was the thing to do. Not only for the ecological impact it can have, but also because I was convinced that it's going to be a massive driver of profitability in the longer term, even though at the beginning it's subsidized, it's unprofitable, it's challenging. We don't know exactly how it's going to work. But still, it's such such a big trend of transformation of the energy landscape that it was something that in my mind was already quite important. And so it started with that first investment into the wind sector, into the French developer, and then it grew to become a big platform with investments in other geographies. I was very instrumental in developing our presence in the Nordics, where I was during 5 years. I was going there almost every week to develop the Nordic platform, which became a big thing, where we committed more than $1 billion of capital there, and then but also in Latin America, and then over time the US and Spain and Italy. So all of these countries became core countries of Ardian in terms of renewable space, and we built an aggregate 3.5 gigawatt investment platform across those countries. And that made us one of the leaders on the private equity side of that topic. And then what happened is in 2020, there was a kind of reorganization within the infrastructure team, and I was asked to become the head of energy transition. And that role implied to think not only about renewables, but to have a more aggregate view about what are the topics that will be decarbonizing the future. And that's where my strategy hat was very helpful, because very quickly reading some research and doing the right interviews with the right people, asking the right questions, you very quickly find out that this topic of hydrogen was actually going to be a major topic. But it was not at all on the radar of the infrastructure players back at that time, and to some extent it's still not, because it's still considered as a nascent industry, and normally as infrastructure player you invest into things which are not nascent, which are proven, no technology risk, predictable cash flows, etc., etc. And so it was a bit counterintuitive to some extent to decide to spend time and to develop some form of expertise on the topic of hydrogen, which is still considered as something where there is no market. The infrastructure market is not a commodity market. It's more of a, you know, a buyer that needs to find a seller. But if you launch a plant, are you going to find a customer for it? It's not obvious from the start. So all of these major questions are up in the air when you start to look at that industry. But it was also I think the thing that got me to say, well, we need to move and to look into it first is that, well, the climate change topic has become like a major topic. I mean, it's on everyone's mouth and thinking now today, regardless of where you come from. So that has become unavoidable, and the Repower EU and the Green Deal, and also like 60 countries which took commitments for net zero is a demonstration of the fact that it is a major topic. And to achieve it, to achieve net zero, to achieve all those goals, basically, you need to tackle not only the 20% that are non-fossil. Of course, you need to increase the share of power into the energy mix. But I think, and that was the eureka moment, is when I realized that actually renewables only represent 1 or 2% of the global energy mix, and that in fact fossils represent 80%. And so, I mean, I realized I would spend 10 years of my life developing things which are representing 2% of the energy mix, whilst actually there's an opportunity to work on something that can tackle the 80%, and that is hydrogen, because out of that 80%, maybe half of it can be decarbonized through power, but another half is like impossible to decarbonize with anything else than a gas or a fluid, and produced in a green way, and that hydrogen is actually the only vector to achieve that. And so that was the point where I realized that it was such a big opportunity, and it had become, to some extent, it was ripe back in 2020. Still early, but ripe in terms of maturity of the topic from many perspectives.
No, that's great. I really appreciate the detailed overview. It sounds like you've had a very busy but interesting career so far. There was a key word in that you mentioned in terms of impact. A lot of people, some people might know what a chief investment officer does, but on a day-to-day basis, what does the role of Amir Shafiri look like, and what do you do on a day-to-day basis to fight climate change?
So, as chief investment officer, one of my responsibilities from the start was to help define the investment strategy, the diversification target for the fund, and to set the mandate for the fund, in close cooperation with our investors, and translate into the bylaws of the fund, and then to be the guardian of the respect of such bylaws when we do our investments. So to be looking at preparing as accurately as possible the different steps of the investment decision, which implies, in our case, we have a go no go, we have a valuation presentation before any submission of any offer. It should be non-binding or binding, and when it comes binding, we have a full and proper investment committee, which requires preparation. And so I have a small team of which you call the analysis team, that reviews the work done by the deal teams, challenges the assumptions, challenges the structure, challenges many parameters of a transaction to make sure that we are conservative enough, and also solid on the analysis that is being done, so that when we get presented to the investment committee can look at it with confidence, can focus on the key questions and not on the details, and having also something that is presentable in terms of format, in terms of details. And so what we do typically is we offer we also provide a kind of paper summarizing our views, as like the analysis team view on the opportunity as well to make a recommendation. So all this is, I would say, the focus and the core of what I need to do in my role. But then it's a bigger role because I'm also a member of the investment committee, and I'm of the executive committee of the company. So I'm involved in the decisions linked to the management company. And I've also, because I like to do it, I've also taken charge of many of the developments we have done in terms of strategic developments. I get involved in fundraising. I get involved also in partnerships. And the most visible one is the one that we signed at the COP back in November together with Masdar.
Yeah.
Where we actually agreed to have a joint agreement to co-invest together 2 billion euros in hydrogen investments opportunities, and to do it jointly, benefiting from their firepower, their access to renewable power, and our expertise in hydrogen.
Yeah, fantastic.
And that is one example, but we want to do more of those partnerships.
No, definitely. And I'll come on to the partnership section in a second, because I'm really keen to dive into that a little bit more. But before we move on to that, you've obviously had a fantastic career. You're in an amazing role, right, at the forefront of energy and climate change. But there must have been challenges that you've faced along the way. Is there any specific ones that you can share, and how you've gone about navigating those issues?
Well, I would say that first investments I did in the wind sector were super challenging, because we didn't know exactly what was going to be the level of wind produced. There was a wind study, and in fact there was a big deviation because it was the first wind studies, and so they were not as accurate as they became over time. So and basically it was true for almost all of the assumptions we had made at that time when we were making those investments. So we were almost in the first years always underperforming, and always hearing our investors saying, well, what's wrong with those assets, etc. Every year there was a bit of disappointment in terms of the performance. But the reality is that because we were one of the first movers in that space, and that we had priced the risk accordingly, even though we were not exactly where we expected to be in terms of the annual cash flow performance, we were actually able to generate a much better aggregate return at the exit, because people wanted to have access to the sites, to those assets down the line. And so there was a goodwill or strategic value that we'd never thought of when we made the first investment, when we started at the beginning. And that was capturing the fact that we, like, for instance, we were targeting 12 or 13% IRR when we invested, and people bought us with an expected return at 6%, because those assets had a feed-in tariff, regulated perspective on the price of the power for 20 years. In France, that's the case, with a good view, and de-risked construction and de-risk operations. With a track record and everything, so with a strong management. So all this means that between our target buyer IRR and the one of the rebuyer after us, there was such a big gap that actually we're massively overperforming our initial targets, even with a slight underperformance on an annual basis. So that was one of the key lessons that I have kept in mind for hydrogen. Is I'm also expecting it will be challenging, but I'm also very conscious and aware that being one of the first movers and the pioneer in that space will lead to some value down the line, and that will that we somehow want to capture into our valuation, but with a very cautious approach to it. But it's part of the strategic thinking about being part of that. And then I would say, generally speaking, I mean, deciding to move into the hydrogen field and launching a dedicated fund manager for hydrogen was a big challenge when you think about it at the very beginning. I mean, it was not something that you decide to do overnight.
No.
But there was a series of things, where ultimately stars were aligning in a way that was absolutely unpredictable. Because, I mean, on my side, I had started this journey around hydrogen and starting the hydrogen working group within Ardian, and starting to get a decent knowledge about the topic. That was end of 2020. But at the same time, in the same quarter, we had the French and the German governments announcing plans for hydrogen, plans and support in the region of 7 to 9 billion each country. And we had a call from the investment bank representing Air Liquide and Total, saying, well, we're launching a tender offer. We want to select a fund manager to run a hydrogen fund.
Yeah.
And that was that was absolutely the conjunction of all these three factors was just totally unexpected and very interesting. But then people thought, well, are you really going to raise a hydrogen fund with third-party investors while the market simply doesn't exist? It's simply not possible. So if you want to raise money from industrials, okay, feel free to do it, but please don't ask us to raise money from institutional investors. They will never come to this play. It's too risky. And I think to some extent they're right. I mean, if we were going to that strategy with just the Ardian hat and our traditional way of doing things, I think we would not have succeeded. And so what changed everything is when Pierre Tenfranc left Air Liquide and said, I'm going to be setting up this this entity that will be gathering the world experts of hydrogen. And that entity will be teaming up with a fund manager. And so we were lucky enough to have a very good fit in terms of personality, in terms of culture, in terms of many things. And also because we were very complementary one to another. And so that led to the creation of Hy24. And so Hy24, I think, therefore became extremely relevant and credible to raise such funds, because it was not just a private equity player deciding to enter into a new field. It was a private equity player combining its forces with the world experts of that industry, deciding to launch a fund, and with the support of industrial groups that are putting their money in the fund, which was something that never happened before. So the combination of these three factors gave a lot of confidence to the institutional investors, and we were able to raise actually in 9 months and aggregate 2 billion, and half of that were coming from industrial groups, and the other half were coming from institutional investors.
Yeah. It's an amazing story, and it's great to hear. And it's exactly, it rolls into the next question I have, and I'm pretty sure I know the angle that you'll go with it. But obviously, Hy24 is a collaboration, it's a joint venture. But in terms of collaborations, obviously, there was the recent announcement with Hexagon. How important do you feel that collaborations and MOUs and joint ventures are in addressing climate change issues?
It's a huge topic. I mean, just to give a picture, figure, sorry, the amount that needs to be invested into the energy transition is in the region of 3 to 5 trillion per year. So that is 5 times more than what is currently being invested. So the reason I'm quoting this figure is to say that there's no possible competition. I mean, it's only cooperation that will make those figures happen.
Yeah.
So MOUs, partnerships are absolutely key into achieving a transition. There's no way people say, I'm going to focus on my little sector and be the dominant player in that sector. Doesn't exist. It's a huge field, and it's all the more true in the case of hydrogen, because it's such a versatile molecule, and that has ramifications across the value chain, that ultimately teaming up and seeing partnerships happen is very important. We're seeing in the case of H2 Mobility in Germany, where we have invested, where you have we have the oil majors there, because they see the route for them for the stations and the refueling stations of biomass and hydrogen. You have and also the providers of that hydrogen being there, but you also have the OEM manufacturers, and they have teamed up into consortium mode to set up a dedicated refueling infrastructure. And so without that joining of forces from investors, industrial groups from all over the world and from different segments of the value chain, we would not have the biggest refueling station network of hydrogen in Germany. And this is just one example. There are so many examples of partnerships that are being done also in the production of hydrogen in Spain as another example where we have seen this very closely.
Fantastic. And go down sort of a different avenue here. One area that I'm quite an advocate for is education and awareness, really, in general. But as a sector, how do you think we can raise awareness and encourage people to take more action, maybe in the day-to-day lives or as businesses, in terms of fighting climate change?
I'm going to say something which is a bit unusual, but I think that doing the little things every day matter to the extent that they create awareness. But these little things are not the ones which are going to be the major game changers. In fact, I think the major game changers happen at the moment when people start to switch their jobs, in fact. that's when the things start to move really, because then you're pushing, the industry and the companies in a different direction. If you tell your employer, I'm not going to work for you anymore if you're not having sufficiently ambitious, sustainable goals, I'm going to quit and I'm going to go elsewhere where they can offer this. And even if it means a small, impact on my salary, that really makes a difference, much more than deciding, to recycle your plastic or whatever. I mean, you, of course, as a citizen, you should do all these things, but these are things which somehow could make you think, okay, I've done my recycling, and so I'm good. I've done the job.
Yeah.
I think the real move is I mean, because is the thing that you spend your time on every day is like we work. I mean, as in the industry, I mean, I'm talking to the people who are educated, and who are probably listeners of that podcast, with a high level of education. I think where you can really move the needle is to influence the decisions that are made by your employer. And actually, the new generation is very strong at doing that. And I have even seen that the employees we have here at Hy24 I mean, the reason why they're joining us is they're convinced, because they're extremely talented, and all of them would have gotten extremely attractive offers in the best private equity firms in the world. And they still decide to come with us, even though we're young and we're starting, and maybe we're not established as some other players, simply because they know we're on a mission.
Yeah.
And I think this is a bit the one thing that can have a strong impact.
No, I agree, and it really rolls into the next question that I have, really, in terms of your advice, or those people that are looking to move, or as you mentioned, the people that might have private equity offers from the Big Four, or wherever they may be. What advice would you have to people looking to join the sector, move into the sector, or sort of completely start in the sector from a graduate level?
Well, I think that no one can avoid today. No one can avoid having a good understanding of the energy transition, whatever the field, whatever your interest, the sector. I mean, this is a field that there needs to be awareness about, and there's a lot of good reports and information available. You can look at Bloomberg, New Energy Finance, and a number of other sources on the International Energy Agency. So, and first thing is to get a good grasp of it, and even I would recommend for those who are studying that they should take a class or a master or something that gives them a good insight into the topics linked to, I mean, climate transition and all those topics. That's a starting point. But then I think whatever decision is made on where you want to work is trying to make sure that the place you're deciding to work has a real strategy around sustainability that is not just ticking boxes of ESG and saying, okay, we've put in place this policy and it's very good, and look, we have light bulbs which are saving energy. Because I mean, again, these are a bit, they matter, because usually the companies that do these things, they also have a bigger thinking around their impact. But these are not, having a strong strategy around sustainability embedded in the core of the company and its operations is the way, I think, to see impact happening. And I think it's a good criteria of selection, because usually those companies are also the more performing ones and the ones that will thrive in the longer term, regardless of what the future will look like.
No, definitely. And I think it's a really great point. And a couple of final questions. One of them is quite a unique one, because you sit quite nicely in terms of the value chain. There isn't an area of the value chain which you would naturally prefer, because you're not a technology business. But going into that sort of mindset, is there any technology pieces that you see in development or existing on the market that you feel are super exciting moving into 2024?
Well, I think hydrogen is not a technology per se. It's a molecule. It's a versatile molecule that implies many technologies are being developed to make it as cheap, as competitive, as available, and flexible as possible. So I mean, for me there's not one that stands out. But I would say that it's not by surprise that we have decided to make an investment to Exxon Purse, because I think they have a very strong angle on what they're doing in terms of storage solutions. And I think that probably storage solutions are going to be one of the big part of the of the way we're going to need to deal with energy, generally speaking, because we're dealing in a world where, I mean, the energy needs are growing, where the energy consumption is not going to be the same place as where the energy is going to be produced. That energy is going to travel, and that storage and even logistics at a broader sense of the world will be critical.
Yeah, fantastic. And then the final question, taking you back a little bit, maybe to the start of the career when you went and bought the first suit and started the first day in the office in Paris. If you could look back and you could speak to Amir on that first day, what 3 pieces of advice would you give yourself with all the wealth of experience you've built over the years?
That's a good one. Let me think. Okay, well, there's one thing that I think anyone starting their career or at the start should have done is watch the address of Steve Jobs at Stanford. It's a very famous speech, but for me, there's one piece of it that is, I mean, all of it is just brilliant, the whole of it. It's very concise and it's extremely well told, but I think the point around connecting the dots that he makes is extremely valid. It's just the fact that, I mean, he started to, when he was in college, he dropped out, and then he was free to do calligraphy, and then he used calligraphy courses to understand typology. Typos were super important, and that made what Mac was so special. And that's connecting dots, which at the beginning you do things just by passion, and then you connect the dots and you create something that is absolutely unique.
Yeah.
And I think that is a very, very valid piece of advice that I recommend everyone to keep in mind always. Then another one, I mean, a bit links to this is when I mean, I did a lot of piano when I was young, and I stopped for a long time after my 20s because I was just getting into the habit of work, and I only started back when I had my first kid because I wanted him to learn the piano as well. And then I took I went to the classes with him, and then the teacher said, why don't you try with me as well? So I started to work piano again, and then the moment I started to do that, it was a massive game changer for me. I was 40 years old when I started again, but the reality is that it made me like so much younger in my mind because it trains the brain, it trains your discipline, and it's so good in terms of having something outside of your daily work. So it's not about pianos per se, it's about having a passion that you can keep alive. And a bit regret that I didn't do it earlier because there's so much benefit to it. And even if it takes time, it's more of an investment that is like that pays off really, really fast.
And I see it's made an appearance in the back of the film as well. It's great to have an escape as well, I presume, in such an intense, sort of high pressure role that you have, having that sort of side or ambition to sort of be educate yourself in different avenues is super important as well. So the last point, if you have one.
Well, you know, Barack Obama was elected with the words "Yes, you can." I think that even if you're young and you start your career, you should believe in this. We can do things. We can make a change. I think it's in everyone's hands to do something. So getting confidence from the start that we can do big things, and there will be people who are skeptical. It's very easy to be skeptical. It's much easier to see everything that is going to go wrong than to effectively take the risk of doing things which are a bit outside of the proven track. But these are the things that actually make a big difference down the line. So I would say, yeah, trust in yourself.
Fantastic. And I think all 3 areas are great advice, but as you finally said, just saying yes and putting yourself out there and making sure you take the opportunities when they arise. So no, it's obviously great to have you take part as well, and amazing to get your insight, and wishing you all the best for the rest of 2024 as well. I hope it's a great year for you and the team.
Yeah, welcome, George, and very nice speaking with you, and looking forward to further exchanges.